Traders at UBA expect the market to remain active as investors with unmet bids from midweek primary market auction return into the secondary market. The subscriptions stood at 675.6 billion naira compared to the 290 billion naira on offer. They note that the results of the auction suggest rates will continue to trend lower. Chuka Nwachukwu, the chief dealer and head of trading at UBA, joins me now for more on the markets. Thank you so much for your time on the show today, Chuka. Let's get a quick look at what we saw play out in terms of the auction there and what we saw in terms of the oversubscription. 675 billion here. Speak to what's driving this sentiment here.
Thank you, Ken. Like you rightly mentioned, we had an auction yesterday. 290 billion was on offer, and that was that amount that was sold. However, we saw well over 670 billion in terms of subscription. Now, two things drive the sentiment. One is the fact that FAC came in, so we had an inflow of over 1.6 trillion, into the system, and so a lot of liquidity in the system, and some of this liquidity have to be invested in fixed income market. And so the auction yesterday was oversubscribed. So from the amount sold and then from the amounts that was subscribed, the subscription, you could see that a lot of activities from those who lost at the auction filtered into the secondary market today, and that's where we've seen quite a lot of activity, especially on the 1 year. So we've seen rate drop, continue to decline around upper 14 levels, lower 15 levels, and so this will obviously continue, towards the end of the month.
But why are the mid-dated bonds, particularly the 2023 paper, attracting that steady interest at these current levels that we're seeing play out?
Yeah, so the 2033 bonds have always been the investor's delight. First is the coupon, and then secondly, the bond is highly liquid, and so a lot of traders, favors and fancy that bond, and that's why you've seen that over the past 2-3 weeks, if not 1 month, we've seen a lot of activities on that bond, and that's why the yield has continuously trend down. We've seen the yield on that bond drop well over 1 to 120 basis points, and that shows you the kind of interest there are on that bond. Not only that as well, we also have a lot of interest on the 2029 bond as well. So we've seen that also drop as low as 15% levels. So these are the two bonds that have been investors' delight, and then as long as the market continues to trend downwards, and we'll continue to see the yields on these two securities continue to drop.
All right, Chuka, so wrap up the conversation very quickly. I just want to get your outlook on next week's bond auction, 100 billion here. Any pricing expectations here or bid strategies?
Yeah, so from what we've seen so far, if you look at the maturities on the T-bill side as well as the bond side, you will see that DMO has tactically reduced the volume. The volume maturing is not what is being offered. For example, the 2029 bond, the volume has drastically reduced, and so the sentiment is that this is a low yield regime, in terms of security, and so we're going to see, the indication is that we're going to see further decline in yield. So the for next week auction, because of the liquidity in the system, and then of course the system has been highly, the trading has been bullish also due to the liquidity in the system. So we're going to see oversubscription as well. So we're going to see further, decline in rates, in yield, as it were. So for next week, towards going to the end of the month, we will see bullish sentiment, especially on the shorter end of the longer end of the call for T-bills, and then for the bonds, the middle, the 2023 and 33, like I mentioned earlier, we're going to see serious bullish sentiment on those securities.
All right, then we'll get to see how things play out. But thank you so much for your time on the show today. Chuka Nwachukwu, the chief dealer and head of trading at UBA.